The next major price action for XRP could be driven by something far more interesting than speculation. The introduction of liquidity pools on the XRP Ledger set things in motion to rewrite how crypto is priced across the entire market. In this video, we're going to break down the price escalator. It's a built-in effect that could push XRP's value higher as more capital enters the system. You're going to see why major financial institutions are watching the XRP Ledger closely, and how this is going to redefine liquidity and price interactions. If you want to know what the catalyst is that could drive XRP's future price action, you're going to want to pay attention to this. So let's get into something that could completely change how you see XRP. Imagine one trade setting off a chain reaction that drives the price higher with everything after it. And that could push XRP's price to levels that we've never seen before. I know it sounds kind of wild, but there's some really interesting math that we need to be talking about. To get into what's really happening here, you need to understand what liquidity pools do on the XRP Ledger. They're not like regular exchanges where buyers and sellers can haggle over prices. Liquidity pools run on mathematic principles. Every trade shifts the price based on a formula, not someone's emotions. And that formula could push XRP's value upward faster than a lot of people could realize once big money starts flowing in. And at the core of these liquidity pools are automated market makers, or AMMs. They run on something called the constant product formula, and that's written as X times Y equals K. Don't worry, this isn't a math lecture. But it's the formula that decides every price inside of a liquidity pool. Each trade changes the balance between two assets. And so to keep that formula true, the price needs to change automatically. And when big trades hit the pool, those shifts can get dramatic pretty fast. You can think of it like a seesaw with one side holding XRP and the other holding RLUSD. The system's designed to keep both sides balanced through the same formula. When someone buys XRP, they add RLUSD and take XRP out, and the pool's going to adjust instantly to stay in balance. And that move can push the price of XRP higher for the next trade. The more people buy, the steeper that climb gets. And so here's where it really gets interesting. Every trade in the liquidity pool doesn't just move the price a little bit. It changes the base for every trade that follows. And so as more XRP is bought, each new buyer pays a little more than the last. And that compounding effect turns steady demand into rapid price action. And so you can think of it like an escalator that speeds up as more people step on. Once it starts moving, it's pretty hard to slow down. And so why does that matter so much for XRP? Well, picture what happens when a major institution decides to move in. Their buy order isn't just going to affect this like a normal trade. It's going to hit the pool with a sizable order, and that's going to pull XRP out fast and force the price formula to adjust. And so that single move could lift the price instantly and trigger a wave of smaller trades chasing it up. One institutional order could send a shock through the system that reprices XRP in real time. And so as the price in the liquidity pools rises, it creates an arbitrage opportunity. Traders rush in to take advantage of those price differences, and they spread the effect over to other exchanges and markets. Before you know it, the price of XRP across the board starts going up. And so really, this mechanism is what makes liquidity pools so exciting for XRP holders. It's not just about the size of the trades, but how they interact with mathematical formulas to create an exponential price movement. A few big trades could potentially send XRP's value to heights that we've never seen before. And so let's talk about what could take all this to the next level. Liquidity pools alone can move price fast, but when you add institutional capital into the mix, the entire market dynamic changes. When a major Wall Street firm steps into the XRP ecosystem, the volume, scale, and intent behind that kind of move would send shockwaves through the liquidity pools into the broader market. And at that point, we're not just talking about retail trades, but really we're talking about firms that manage hundreds of billions, sometimes trillions of dollars. Now compare that to the liquidity sitting in the XRP pools right now. It's just a fraction of that. And so with even a small amount of institutional capital entering, the scale difference alone could push XRP's price beyond what retail activity could ever do. So think about this for a second. If just a small slice of institutional capital moves into the XRP liquidity pools, the impact could be explosive. We're talking about sharp movements that really redefine what the XRP market looks like overnight. And once prices are there, it's more likely that they'll be able to hold at that price range. And so that's the real power of institutional money flowing into the XRP liquidity pools. The first wave of investment will push the price up fast, but then everything else starts to spread into the broader market. Each pool reacts to the others and amplifies that effect. What starts as one big move can cascade through the entire network. And remember, that compounds with every trade that follows. So if you're wondering how these institutions plan to interact with these liquidity pools, they're not likely to just dive in head first. Instead, they're probably going to start with cautious, small allocations, test the water with smaller investments. But even those small moves could cause significant price action given the current size of the XRP liquidity pools. As institutions start to gain confidence and see returns, they're probably going to gradually increase their positions. And with regulations finally being defined clearly around the world, it's likely we're standing in front of a massive dam that's holding back a reservoir of institutional capital. The moment that dam breaks, we're going to see a tidal wave of investment that floods the XRP market. And I think it's likely that those liquidity pools are going to be the bridge between regulated institutional capital and XRP's real market potential. With regulatory clarity finally being defined worldwide, the doors are wide open for major players to step in. And that influx of capital could expand liquidity across the network. It's going to tighten spreads and give XRP a stronger base for large-scale financial use. We're seeing technology, institutions, and policy all moving towards the same point. And so the rise of AMMs and on-ledger liquidity is a major change in how digital assets gain value and stability. And this goes way beyond speculative investment. It's the foundation for a new market structure for XRP. As institutional capital flows into the market, I believe we're going to see a dramatic transformation in XRP's utility and adoption. Everything in crypto is evolving really fast right now. So what do you think? Are we on the cusp of a new era for XRP? Drop your thoughts in the comments below, and I'll see you on the next one.